Okay, that was fun setting that up. Um, had a couple issues getting the recording going. I guess welcome to another car talk. Driving in the rain. I don't know why I call it car talk. I'm never actually in a physical car. I'm in a transport vehicle. Um, so today is the day Trump's supposed to announce the tariffs, and it could be a very chaotic day in the market. Well, here's my thoughts. And I realize nobody's actually going to hear this, but maybe one day somebody will come back and watch some of my old stuff and see. I think the market makers and big money people have already placed their money where they think this is going to happen. I think Trump has signaled all the possibilities because what the exact tariffs are, we don't really know yet. We have a good idea, but we don't really know. But there's been enough signaling from the White House about the type of tariffs we're going to see. And why does this matter? Because investors like myself will never have enough money to move the market. It's the big money, the BlackRocks, the Vanguards, the Fidelities, State Streets, the big money investors that really drive the market. I mean, I think it's something like, I think Vanguard, BlackRock, and State Street own like 30% of the market or something like that. And most of that's like it's all mutual funds that they sell to the public and mostly through retirement accounts, but they've already priced in what's going to happen. Now, and they've probably priced in the worst case. Now, Trump comes out with something a little bit lighter than they are expecting. You may see a slight run on the market. You may see things go up a lot. If Trump comes in and does something a little bit greater than expected, you'll see the equal but opposite reaction. You'll see, oh shit, the market makers, pardon my language, the market makers are going to be saying, we didn't anticipate this, and they're going to have to make an adjustment to their portfolio. And as that occurs, that's going to make um, a big change to how things move going forward. N- One of the things that I see in the market that I don't hear anyone talking about, but we hear about the reciprocal tariffs. And I know a lot of that has to do with automakers and stuff like that, trying to get more factory work here in the US. But what about healthcare? We have healthcare businesses in the US that sell medical devices that are manufactured in another country. Um, if all of a sudden there's a 10 or 20% increase in those prices, that's going to dramatically change the cost benefit analysis of these healthcare establishments like hospitals and so forth when it comes to purchasing new equipment. Thus, you may see a slight slowdown in new equipment going into facilities. Hospitals, they have equipment, so new equipment is just either replacing old or bringing in something new for them to add to their portfolio of services they offer, which, if we go further back, to the early 2000s, like hospitals going from open surgery to robotic surgery. So you may see a slowdown and stuff like that. If that occurs, you may see a drop in some healthcare companies' prices. And it could be a decent drop. Um, so w- as that occurs, there may be some petitioning and lightening of the tariffs on these healthcare companies. Be on the lookout because if you see a drop in a healthcare company, a Philips, a Siemens, or even a smaller one, and it's tied to the tariffs, that may be a buying opportunity. I have a couple that I'm looking at that I think are going to be buying opportunities to buy some And once those tariffs relax on those healthcare companies, I'll see my realized gains. Or once the big money people realize that they didn't see that sector and the price is down, they'll start going into it. And when they start going into it, that will drive the price up. Either way, I've got a couple companies that I'm looking at. I put limit orders in at lower prices, um, typically 10% lower than where it's at as a close of business yesterday. Um, and that's to purchase in and buy these companies. Anyways, the goal is to keep accumulating and stacking. Um, I've been looking for a new bot that, and I may not it may not exist, and I may have to create it. But I'm looking for a new bot that not only dollar cost average and makes profits, but it keeps those profits in the crypto and transfers that automatically off the exchange. Those profits, so those profits don't stay on the exchange. Uh, don't know if it's even doable. It'd be really cool because then you could just set up your hard wallet, set up the bot to automatically drive it over to your hard wallet, and you open up your hard wallet one day and you know you've got $1,000 extra there just because this bot is running. And the bot, and the way I would probably do it is for the bot to keep 20% or 30% of its profits in the exchange, not in the cryptocurrency, but in cash, so that it can constantly increase the size of the positions it's taking. But because I'd like it to be okay, I'm going to do, let's play a game. We're we'll put $1,000 and we're going to invest in Bitcoin with that $1,000. The bot is programmed to take 10% of that money and put it in to Bitcoin. And let's just say it buys in at the price that you see on the screen, 84.5. That's what it buys in. But it's set that if the price goes down 1%, which is, $840, so if it goes to 83 something, it's going to buy more. But what I want it to buy is 25% of what is in there. So we have $100, we're going to buy $25 more. Then if it goes down 1% more, we're going to buy 25%. So we'll buy 25% of $125. And slowly but surely, that's how it's increasing its buy so that it's lower dollar cost averaging. Now, the sell price, let's just say I have it set for 10% because that's easier for me to do the math while driving. Let's say it's got $250 in. So our sell price is such that we're going to make a $25 profit. Of that $25 profit, I want $12.50 to be kept in cash so that next time, instead of starting with $100, we're starting with, or having $1,000 to buy in 10%, we're now starting with $1,012. And then the other $12 is kept in Bitcoin and transferred out to uh, either another portfolio inside the same exchange. If I can't get it to go to another or get it to automatically transfer off chain, and then I just have to manually go in once a week or once a month or whatever and make that transfer, or transfer off to a hard wallet. My preferred method is it transfers off to the hard wallet. If it does one of these transactions a week, that's only $12 a week going over to the hard wallet, but that would be $12 week one, and week two it might be $13 week three because it will accumulate. The size of the cash will increase along the way as well. And so that's kind of what I want to do. If anybody knows of any bots like that, let me know. I'm probably going to be very leery of anything I see in the comments, but comment below if you know of one. And even if you know of one that will just do the trading portion that I want to do and won't do the transferring, I can do the transferring myself. Other than that, I think we're going to see an exciting day here in the crypto markets, and I think we should hold on, and well, not even crypto. I think in the equities too. I think the only thing we um, might see oil go up because of the tariffs. I don't know what they call it, the second party tariffs. Basically, there's going to be a tariff put on any country that does trade with Russia, kind of a penalty. So if China does trade with Russia, there will be an increased tariff on China. So China has to make the decision: is getting oil from Russia more beneficial than selling stuff into the U.S.? So they're going to have to make these decisions. I think this will cause some countries, because their trade with the U.S. is so great. This may cause some countries to not buy oil from Russia. Long story short, I think this will increase the price of oil. I think the global instability, I heard Germany is now putting troops on the Russian border, which I think is stupid. I think everyone needs to back down, figure out how to solve things with Russia. I don't think Russia is trying to have world domination. Um, I just think Russia is more leery of NATO, as they should be. NATO was entirely formed to battle Russia, but they're more leery of NATO than we give them credit for, and so they're more skeptical of anything put in front of them. But I'm hopeful that we can get a peace between Ukraine and Russia. We can stop all the fighting. I'm hopeful we can get a peace in the Middle East with Israel and Palestine, because I'm tired of seeing people die. I don't like it. But I'm going to get off that subject. But all of this stuff does affect the economy, and you've got to not only look at economic news, but global news, because global news affects currency prices. It affects trade, and currency prices and trade also affects equities, and it also affects crypto. So you'll see gold, oil, kind of react. Gold really kind of goes inversely to the dollar from my experience. Sometimes they go parallel to each other, but usually from my experience, they don't. But be on the lookout for the crazy stuff today when the bell rings here in about an hour or so, and don't panic sell. If you got a position and you think that position's solid and it goes down, hold. If you're in the leverage position and it goes down, make sure you have a stop in place so that you don't lose too much. Because if you lose 50%, you've got to now make that plus some back. So if you went from 2,000 down to 1,000, you now got to double your money to get back there. So remember that. Also, remember if you're in leverage trades, that you also have a situation that's occurring, which is the cost of the trade, which is every 8 or 12 hours, whatever the exchange charge is. And it's a small percentage, but it's going to chip away at what you have in that account. And so if it goes down 50% and you didn't have your stop in place, and it's going to take you 2 weeks or 3 weeks to recover. Just think, we were at $3 for XRP not too long ago. You're still in a position there. Well, you probably liquidated, but if you're still in a position there, you're in a situation where we've got to make almost a 50% run in price for you to get at a break even from the price you bought in at, except to get at a dollar for dollar break even, a little bit more. Because this chipped away with these funding fees, this chipped away with on your money. So just be aware, be cautious, and we'll see how today goes.